Hello, everybody, and once again, welcome to Synonomics. I hope all of you are having a great weekend. As I had promised in my previous videos, I was going to cover India, specifically India, in one of my weekend editions, and here I am. Having said that, India is a vast country with huge cultural, demographics, and a lot of other variations. We are not getting into that. We are pretty much focusing on economics and financial markets rather. What's the economic condition of India, where it's heading to? What are the financial markets to play with? How the markets have performed, and where we see big opportunity. Having said that, I'll start this whole discussion with Morgan Stanley's report recently. Morgan Stanley recently published a report where they mentioned that India has transformed itself in the last 9 years. So pre-2014 and post-2014 is totally different. And I'll use that as a reference to throw some numbers to you. In fact, in my previous video, I did cover that India recently released the data that they closed FY 2023 at 7.2% GDP growth rate, which was quite good. 272 trillion rupees is the GDP, which translates into $3.5 trillion US dollar. Morgan Stanley, on the other hand, has taken 2022 as their baseline. That's fine, doesn't matter. And by 2022, India was $3.1 trillion. And that's going to grow in next 10 years by 2032 at 9.7% CAGR to $8.9 trillion, roughly $9 trillion. If you look at GDP per capita, or we can call it per capita income as well, it was at 2200. Right now it's at 2500 roughly. But in 2022, it was at 2200. With 8.7% CAGR, is going to grow to 5200 per capita. Guys, even though the growth is great, but if you look at the state of affair right now, 2200 is pretty small amount, right? So a huge population is below the poverty line. And right now, 60 out of 300 million households, 60 million households are middle class. And according to Morgan Stanley again, by 2032, 160 million households will be in the middle class. So from 60 to 160, 100 million households will join the middle class. And that means what? That means huge retail spending, demand. I'll come to that a little bit later, but let me give you the perspective. 2200 US dollar per capita is really, really small. So India from that perspective is poor. Let's look at some other countries. US, for example, has $70,000 per capita. Income per capita, GDP, whatever you call it, they are same. UK is 49,000. And for that matter, if you look at China, is at 19,000 per capita. So as compared to these countries, India at 2200 is really poor right now. But the good news is that there's a huge growth out there. So the nominal GDP is supposed to grow at 9.7% per annum for the next 10 years. A lot of things have been done actually, which actually is quite remarkable. And I'll highlight a few of them here. One of the most significant one was basically to connect everybody through Aadhaar card and PAN card, etc. A lot of other countries have it. In Australia, we have tax file number. US has social security number. Singapore has their ID card. Every Singaporean PR and citizens are given an ID. And they have the ID number. NRIC number, they call it. So, Modi government, actually it was started in Congress regime, but it wasn't brought it to fruition. So Modi government actually connected everybody with the Aadhaar card. Now everybody is connected. And then a lot of other reforms have happened, but another most important reform is the corporate tax reduction. The corporate tax was reduced from 35% to 22% baseline. This was a massive cut, and that has given a big boost to the corporations. And that has brought India pretty much in par with the rest of the low tax countries of Southeast Asia. Let's look at that. China is at 25% corporate tax. Japan is 23%. Taiwan 20%. And Singapore is one of the lowest tax jurisdiction country in the world. Singapore has 17%, 17% corporate tax. Still 5% lower than India. So, having said that, so that was a big thing. Another thing was the bankruptcy law. Earlier, people used to take money and get away. They were not caught because there was no bankruptcy law. Modi government introduced that. So some of these are really cool. I would like to highlight again that, the biggest advantage India has right now are two. Number one, demographic. It has a demographic advantage. 65% of the population is below 35% of age. Guys, that's huge. And guess what? China for the first time this year will have a negative population growth. Japan is struggling with their aging population. Same with Australia. Many of the Western strong economies are struggling with their aging population. Other than that, China plus one. If some of you guys don't know about it, let me give you some background. After COVID, most of the world corporations got scared because the whole supply chain was disrupted. China was considered the manufacturer of the world, factory of the world before that. But during COVID period, everything got disrupted. And then most of the corporations, most of the countries realized that you can't put all your balls in one basket, right? And now the two theories have come up. China plus one, and especially in the Europe side, they're also talking about Europe plus one. They're looking at Eastern Europe as one of the other destinations to expand, whereas the rest of the world is very much focused on China plus one. And when it's China plus one, there are two locations. One is Vietnam and another is India. Vietnam and others are still not that preferable for two reasons. Number one, the language. Not everybody is speaking English there. Number two is the political instability and a lot of other factors. Whereas India, on the other hand, has its own advantages. The first I mentioned already, demographic advantage. Second one is the language. If US companies setting up their factory there, which they have already done, plenty of them, Apple has it, Tesla is now talking about it. And plenty of them are there. No need to get there. English is an advantage. Political stability is one. And one of the biggest hurdle that was there was tax. But still, things are not very rosy, by the way. Still, there are a lot of bureaucratic hurdles. Infrastructure is another challenge for India. China actually focused big time on infrastructure. Chinese infrastructure is top class. India is not there yet. So now with the Minister Gadkari, things are moving pretty fast, in fact. You'll be surprised to know the fun fact that whatever has been spent on infrastructure in last 75 years, 50% of that has been spent in the last 9 years. Having said that, a lot of things needs to be done in the infrastructure space. Bureaucratic hurdle kind of reduced, but still there are plenty of them. Corruption is getting tamed, but I would not say it's very clean. So a few things are there which I think will be taken care of. So with China plus one, most of the countries, most of the companies are trying to set up their factory in India. And from the government perspective, Modi government wants India to be a manufacturing hub. And guess what? They have started working on it. Now India is the second largest mobile phone manufacturer. And on top of that, with Make in India, especially in the defense, which has in fact surprised me, with defense, India is pretty much now one of the large exporters. All the missiles and all the Other stuffs are getting exported from the companies like Hindustan Aeronautics, Bharat Electronics, Mesgaon Docks, etc., etc. So some of you who are interested in stock market, you like to look at defense segment, but that's for long term, guys. Having said that, all these references that I'm giving here is not a recommendation. This is just for entertainment and educational purposes. That's my disclaimer. So please consult your financial advisor before making any investment decisions. Okay, let's move on now. So with that, pretty much the picture is quite rosy. In fact, right now India is the 5th largest economy after US, which is $26 trillion. Second is China, $16 trillion. Third is Japan, $4.9 trillion. Fifth is Germany, $4.1 trillion. And fifth is India, $3.5 trillion. Guys, with the current growth rate, and when the rest of the market is sluggish basically, and some of the countries are already in recession, right? I think India will be pretty much 5 trillion economy, and if India becomes 5 trillion economy, India will be the third largest economy after China by 2026-27, or maybe 27-28, next 4 to 5 years. Let's be a little bit more conservative. Even if you look at from the Morgan Stanley report, 9.7% CAGR, 27-28, India will be third largest in the world. And guess what? Many of us who have not seen a country becoming rich from poor, because that's what Narendra Modi's vision is, to bring India in the league of developed economies. Anyway, that's too far. Then in next 25 years, by the way. Yeah, but that's too far. Let's talk about next 5 years. If next 5 years India becomes third largest economy in the world, that's a big change. We have not seen that happening. In fact, China was one of them. China had a stupendous run of 30 years of growth. But guess what? At that time, the whole world was growing. And number one. Number two, China is not transparent. You don't get the clean data, you don't get all of them. In fact, even from the finance perspective, even from financial investment perspective, China, many of the fund managers are struggling. Recently, there was a survey with all the emerging market fund managers, and most of them, 47 of them actually said that India is overweight. They're going to keep India overweight. They're going to invest in India. MSCI index, Morgan Stanley Capital International Emerging Market Index, which is basically tracking all these funds. And they do have their own fund actually, MSCI fund. There India is now number 3. So out of the whole fund, 31% is still China, 15% is Taiwan, and now 14% is India. Very soon India will be number 2. So with all those changes after the COVID, and another challenge China has, that you cannot bring money out. Indian government has made that very, very efficient. And that's what happens. The foreign institutions invest in India, and whenever there is an awkward situation, for an example, when US dollar is getting stronger or Dow is going down, or whatever is the right conducive moment, they pull money out from India. It's very easy to do that. Whereas in China, it's not easy. Mark Mobius, one of the fund manager who has started his own company right now, own fund, Mobius Fund, actually mentioned in some of the interviews that he's having a hell lot of trouble bringing money out from China. So, cut the long story short, looks like India is pretty much in the growth territory. So guys, stay focused and don't ignore India. Now let's look at the stock market, how we can benefit out of it. So if you look at the stock market, for that matter, Indian stock market in US dollar terms has performed, or the best in the world. It has outperformed most of the indices in the world. And I'll give you the numbers. Before I go there, let's start where it has gone to. So Bombay Stock Exchange, one of the oldest stock exchange, used to trade stocks throughout, right? But things were quite different. And I remember my dad, he used to buy shares, and the share certificate used to come in mail. Sometimes the mail used to get lost, and he had to write it to the company to get another share certificate, etc., etc. He had to deal with all the brokers. If he has sold a stock, he'll not get the money for next 3 months or whatever. Nobody could see what's the price going on right now. What's the price of the stock? We could only see in the paper the next day. So this was the state of affair, which was actually changed later. But Bombay Stock Exchange Index, key index, is actually Sensex 30. That has the top 30 companies from market capitalization perspective in there. Very much similar to Dow. That started, actually the index was created in 1980. So any index that gets created is 100. So in 1980 it was 100. Friday close it's 62,500. And actually it had a high of almost 64,000 if I'm not wrong. So you can actually see the amount of growth it's there. From 2014, when Modi came in power, Sensex was roughly around 16,000. And right now it's 64,000. 62,500 now, but it has hit 64,000. So 4x. The last 9 years, none of the countries have delivered 4x growth in their indices. Many of us who live abroad and the foreigners who think there is a currency devaluation risk there, which is true in fact. I was doing my own maths, and from Australian perspective, it's a 1.5% decrease every year. From US dollar perspective, it's around 2 to 2.5. You can take 3 as well, so 3%. But if the market is growing like 400%, 4x, if you're getting a return of 400% in 10 years or 9 years, why are you worried about 3% currency devaluation? Still you are better off, right? So if same thing happened in 1992, the National Stock Exchange was created and the index Nifty 50 was created as well with 100. Right now it's trading at 18,500. So if you look at from that perspective, it's huge. And as I mentioned, all the other factors before, there's a big opportunity out there in Indian market. If you look at one of the other good thing Indian government has done is actually clean the whole bank. Most of the banks, especially the government banks, were quite messy with their non-performing assets. They had given loan to people they could not collect back. Everything was there. So NPA, non-performing assets, have been cleaned up now. And most of the banks are in a very, very healthy situation. And guys, when the country grows, when the economy of the country grows, the credit increase, the credit growth is very important. And for that, the banking system has to be very robust. And I must tell you, right now, Indian banking system is really, really robust. And that's giving a big confidence to many of the foreigners who are investing in India. I think the purpose of today's video was to give you a highlight of that. But I'd also like to bring your attention towards some of the things which has surprised me. Even in the last 4 or 5 years since I have started investing in India. I started in 2016, 17. After the demonetization or just before that. So kind of 2018, you can say that I was kind of fully invested there. And after that, I'm not pumping any more money because I don't live there, right? So anyway, I have seen in my 5 years, 5-year investment history in India, many stocks becoming multi-bagger. When I used to hear about it before, that stocks are becoming 10 times, 5 times, 20 times, 100 times, I used to wonder, will that happen? In my lifetime, will that happen? But actually, it has happened. I'll throw some examples to you. You can go and check the prices. When the demonetization happened, like Bajaj Finance, for example, was trading at 700. Right now, it's at 7,000. It has closed at 7,100 last Friday. Similarly, if you look at Nestle, for example, Nestle was trading at around 7,000. Right now, it's at 22,000. Britannia is another example. That was trading at 1,500. In fact, it was trading at 3,000. Then it gave a bonus share. So bonus share is one share becomes 2. So it was trading at 1,500. Right now, it's 4,600, and the list goes on. But there are plenty of those stocks. You need to be very careful about it. The reason why I'm giving all these advice and education is it's a paradox. We all love money, we all want money, but we all fear going to the stock market where you can make money. Many of us feel that it's a gamble. Many of us feel that, oh, people lose money in stock market. But that's not the case, by the way. If you buy things without knowing, of course you lose. You need to buy in the companies who are performing, the companies who are solid from their financial perspective, from their balance sheet perspective, from their management perspective. And as Warren Buffett says, you're not buying a stock, you're buying part of the company. So once we start thinking about it and acting on it, things will be different. So remember, 3 things are very important in stock market investing. Knowledge to understand which companies, where to invest, etc. Knowledge to understand, courage to buy. Many of us keep doing some lot of analysis and end up in analysis paralysis. The stock market goes up. So knowledge to understand, courage to buy, and patience to hold. With that, I think I'll give rest to this discussion right now. And I think I've given you enough information about Indian economy, where India is heading in the next 10 years, how stock market is performing, and where the opportunities are there. I'll continue to talk about it in the consequent episodes. A little bit more focused on industry specific, sector specific, etc. So I hope you guys enjoyed this video. Thank you very much for watching it. Once again, thanks for your support. Don't forget to like it, share it, and subscribe it, and hit the bell icon. With that, it's a goodbye from your friend Pankaj Sinha.